Trade fears slamming stocks today. The Dow sinking more than 700 points at the lows of the session, down more than 1,000 points in the past week. So even though things could get worse before they get better, what can you buy now? And I know we ask that a lot, but I think people at home are wondering, what kind of levels are you looking at? What are you willing to buy? Where do you see value in the market, Karen?
Well, Google, right? Obviously, it's had a terrible few weeks. Much of that self-inflicted, and then the rest of it, the macros. But I still think that's an extraordinary business. And people were disappointed with the revenue growth. The revenue growth was still extraordinary, right? If you were to back out the cash, which every time I say do something with your cash pile, it's ridiculous. I think it's growth at a very reasonable price.
We've talked about United Health for a long time. Look at that stock today. It had every opportunity to get bludgeoned, and it didn't. Down about 0.5%. Still at levels. Basically, we went from 218 to 240, and we're right there now. So, I think the bullseye that's been on the back of these stocks is going to be off for quite some time, and I think the cream will rise to the top. So, if you're looking for an opportunity, I think UNH is as good as it gets.
Yeah. So, I have a pretty simple way of doing this. I don't like to be too early when you're trying to buy a dip like this. I'd want to avoid like a Google. You said is a self-inflicted thing that may take a quarter or so to work itself out. Look at two names that reported in the last month or so that had stellar numbers in the stocks gap. Look at Microsoft and look at Disney. And I look to the breakout levels where they just were. In Microsoft, that would be at 115, and at Disney, it'd be 120. And if you get weakness in the next week or two or whatever over a period of time, that's where I want to kind of go into those. Apple has a level, down at 170. I mean, you want to catch some of these breakouts. That's where they should have some prior support.
So I would go to Apple, and I would say because they are such an obvious trade war victim here, it's one of the reasons why you have to assume that people have shot first before actually asking the proper questions. What we know about Apple is they will capital markets-wise support you as a shareholder, no matter what, for the next 3 years. There's no turning back from that. And I do think services revenue is meaningful. It doesn't need to be. But again, on a blended multiple at this point, Apple, I did like it 2 weeks ago. I like it more now, even though I don't like these headlines. And then AT&T, because again, you get into a domestic story. We're a place where we're not worried about a trade war victim. Lower rates for a company that's got an avalanche. Well, maybe it's not an avalanche. I don't think it will be an avalanche of debt. But that's the criticism here. And finally, it's a 7% dividend yield at a time when rates are going lower. Not the reason to buy it, but interesting.
All right. Well, Carterworth says there's a number of high-paying stocks that could make for perfect hideout trades. He's back over at the Plasma to tell us what they are. Carter, what are you looking at?
Sure. Just Monday's report was about low beta stocks, typically 0.6, with high dividend yields. I've singled out two. They aren't necessarily that, but I think that are quite good, and then an ETF. So just think about the circumstance that is the general equity market. We know we have a top in the autumn, and we have this plunge. And we know that we had the reciprocal recovery. But what we also know is that the S&P, after getting back to this prior level, has backed away. And that is not the case, of course, with this. One of the most efficacious factors, if one were to look at all things, momentum, but relative strength is number one. A stock that can hold sideways like this and unchange in a period where equities are being murdered, that's very, very impressive. Costco is one that's reacting well to its high, and I think ultimately, even if equities get worse, it will hold up just better than most, or if equities bounce, it will indeed break out. Now consider that picture and look at the next. It's identical. This happens to be, well, it's salt and pepper, right? It's oregano. This is McCormick and Company. It's also defensive. Costco's for the most part, a grocery store. But it's the same circumstance, a peak with the market, a bottom with the market on Christmas Eve. And then, unlike the market, though, the market, of course, backs away. And this stock didn't do that, right? This stock holds tough at the high. Impressive relative strength. I think this is another one you want to be in. Now, a whole group. It's an obvious one. There's no real insight here, but the principles are the same. Utilities peaked in September. Have they come down? No. What utility has done is held their ground. They were up today. That's impressive. All these would suggest that in the event of general weakness, they hold up better, or if we bounce it, they in turn can break out. And then just to put it in context, what do we know the S&P did? It has its high, it has its low, and it gets right back to that former high. But instead of holding, the S&P has broken. Those other three, utilities, Costco, McCormick, did not break. That's a very important day-to-day data point.
Carter, come on over.
Sure. Yeah.
Yeah, Evan will bring the chair over, as he does.
Thank you, sir.
Look how graceful Evan is.
You know, he's
4
a
years
very
of college.
talented
Fantastic.
page that we have on our hands. Thank you, Evan. Nice to see you, Carter.
Thank you, guys.
Is anybody buying any of what Cornerstone?
Quickly,
here?
Costco, I'll say it. Their April comps up 5.5%. The street was the street was looking for 4.5%. E-commerce comps up 24%. I mean, Costco is really firing on all cylinders. And it's interesting that Carter mentions this because typically you say, look at that chart, it's a double top. But we've been at this 245 level now for quite some time. Should have gotten hit today. It did not. That's a very good sign. Good for CBW for pointing that out.
I mean, that was the hope. Not that I would point it out, but that if you're going to be in a stock, if it hangs in well, it's like any other thing, an athlete or a political campaign or anything, any endeavor that stays firm when otherwise shouldn't be. It's an important tell.
In retail, would the opposite be true? We were talking the other night about XRT, and when you look at it, how bad it's acted. Now, obviously, you picked a standout in Costco, but the fact that it just gave up, it's down 20% now from its 52-week high. Do you want to press those sort of weak names?
For sure. I mean, and those are businesses. Many of them just won't be around. Whether it could be an Urban Outfitter or a GNC or Fossil. These are businesses that ultimately, as we see often, just close up. But Costco has the defensive characteristics of low beta and its groceries, which are being seen in the chart.
I wanted to ask you about some of the other so-called safety trades that look like they were breaking out today. Gold above 1,300 for the first time since April 11th. We had the 10-year yield hitting its lowest since March 28th. Do any of these charts look good to you?
Well, see, that's just it. I mean, think about that message. If we just put that picture all together, you even throw Bitcoin in there. I mean,
sure.
who knows what it is? But, I mean, it's acting well. Gold's acting well. The fact that we hit 239 today on the 10-year.
Yeah.
What about this is constructive? And then there's this. If you consider where we are relative to September, we're below where we were in September, so that's almost 10 months with no progress, but with a lot of volatility. In fact, we're below where we were on January 26, 2018, the peak for global equities. And what does that say about the risk reward here? You load the boat. I mean, I think we're going to 2% in the 10-year, and then ultimately equities at a minimum can fill those gaps.